Good afternoon, everybody. Welcome to Trader Merlin Show. As you saw in the chat here, kind of a lackluster day. It wasn't that much really going other than the Dow Jones Industrial Average rocking to an all-time high. So I thought I would do a show based off the not so breaking news, but we're going to have a vote this evening, and hopefully this government gets back on track, opens up. Who knows if that's going to happen. But I had one small challenge with my graphic here today. As you notice, I put prepared for liftoff and have an exclamation point. It should have had an exclamation point and a question mark because really we don't know exactly which way this thing's going to go. So I thought I would give you guys a poll. Here is your poll. And the poll is, when the shutdown ends, which we know it will the markets rocket to all-time highs, be choppy but sideways, or crash, baby, crash? I'm just curious what you guys think. Type it in the chat there, or not type it in the chat. Click the poll that's in chat right now. Unfortunately, some of you watching the recordings of this won't have a chance to participate. So as we progress, I will tell you what the audience here has decided or voted upon. And, you know, usually at the beginning of the show, there's not a lot of people here. They kind of come in as the show progresses. So we'll maybe let this poll go on for just a little bit. As Rita says, lift off to where? That's the question, right? We don't know whether it's going to be well received and just we vault higher, or do all of a sudden markets turn around and we see just an implosion. I don't know. I don't know which way it's going to go. I won't give you my 2 cents until for a little bit here until I get the voting in. One thing we do know for sure is that we're at an impasse from the vote perspective. And I don't know. I don't follow it. I'll be honest. I really don't care. Just get it done with and move on. That's my main thing. What I am following a bit more closely is this right here, which I'm calling it the Fed dilemma. You know, many of us are expecting and pricing in the fact that we should see a 25 basis point cut at the next FOMC meeting, which is December 10th. 27 days away, 20 hours, 57 minutes, and 16 seconds as we speak, if you want to be precise. And you'll notice that the probability is dropping quickly here. You know, we were at 91% chance that we're going to get a 25 basis point cut. That was in October. October 10th is when that number came out. November 5th, it was down to 62%. And today, we're actually down to 59%. It's almost a coin flip. So what I did, of course, using the assistance of AI, I went through and said, give me a table that builds out what each voting member from the FOMC is thinking. So I'm going to show you here. This is what Grok came up with. And this is those voting members. And I know most of you listen to podcasts, you can't see this, so I will just read out what's on the screen here for all 12 voting members. The top two are Powell and Williams. Now, both of them have been very clear. They're not sure which way it's going to go. They're going to be data dependent. So I have the double D's after that. So data dependent for Powell and Williams. Barr has already said he feels 25 basis points is in order, so he's supportive of a 25 basis point cut. So is Bowman. Now, there's two that are opposed on this one. That's Collins and Schmidt. Both of them have said, no, I think we need to stay the course and stay where we are at for quite some time. Let's just kind of, yeah, you like that, Ollie? I'll get to that one in a second. So they're the only two that are opposed. You have Goolsbee, Jefferson, Masalam, Waller, and Cook are all supportive of a 25 basis point cut. And I have Moran here. We all know Moran's just the Trump poster child. So he... Duh is what I have written on the screen, which is garnered a couple laughs. I like that one too. Moran wants 50 basis point cut, but he's also wanted 50 basis point cut at the previous two meetings. So, yeah, he wants it zero, maybe even negative. Like that guy's just off his rocker. But, it's just like statistics in school, right? You have this bell curve, which should have a standard deviation to it. And once you compile all that data, you take out the outliers and you get yourself down to the middle where you're looking at that, 68.2% probability that 68.1% of all the data, 68.2% of all the data will be within one standard deviation above or below the mean. So that said, if we look at this, it does support the Fed funds futures. Right now is at 59%. You really have 8 members supporting a rate cut, right? 8 members supporting a rate cut. It should already pass. Merlin wants a rate cut, but at 50 basis points. So, come on. That's just ridiculous. And you have 2 that are uncertain, and then 2 that are actively opposed to it. Those are your 12. So you've got 8, 2, and 2. It would seem that at this point in time, everything should be okay and supported for a 25 basis point cut, which we can see here on Fed funds futures. I am a little bit surprised that it's dropping to 59%, right? We were at 66% yesterday. and now all of a sudden it's 59. So maybe a little bit of uncertainty from the investing population, at least the traders who are out there making bets with real money on the Fed funds future. So I thought that was kind of interesting. But there's more data to this, right? There's more information that needs to be brought to the surface. Now, I forget who the press release woman is. I never follow those guys anyway, or gals. But there were some comments made today that might change this a little bit. There were comments that CPI, it was CPI and the jobs data for October may never be released, right? Now that the government's been shut down, they didn't have time to compile it, who knows, whatever. It was made a statement say that information may never be released. Now, I had a friend ask me about that today. He said, well, doesn't that screw up everything? No, it doesn't. It just means we now have to wait for the November data, which, we just have one little gap, one candle that'd be missing on our chart, so to speak, one little variable that's missing. Now, right now, at this moment, we don't know exactly how bad it is or how good it is, but that November reading should give us a much clearer indication, and I don't think it's that big of a deal if we don't get that October data released for CPI, PPI, and for the jobs data. So shouldn't be too big of a deal. They don't want to release it. I think it isn't good. Maybe, Steve. Maybe that is the truth of the matter. And if that's the case, then maybe we see the tail end of the year here, this market's really sell off. Because if November's data comes out real bad, right? Let's say you're correct, Steve, and you think that the data's not good. Let's just use CPI, which is hypothetically shows higher inflation. Let me see if I can bring up that data for us here. And there is... One second here as I bring up that weekly data, because we're supposed to get that CPI and PPI data. We'll just drop everything here. None, only the U.S., and then we'll get rid of some of these consumer surveys and business surveys, speeches, miscellaneous. All right. So here is the U.S. for the week. Let's see. So core PCE price index number should be coming out Wednesday the 26th. That certainly is before that FOMC meeting, which will be December 10th. Last week, we should have had... I think it was last week or this week, we should have had the CPI and PPI numbers. Right now, nothing tentative for that release. Now, the first real number we should see would be the unemployment rate numbers, which is going to be December 5th. Now, remember, that's 5 days before the FOMC meeting. And for those members who are data dependent, like Powell and Williams, that could skew. Now, even if it did change their perspective, let's say the data comes out and shows inflation spiked. Unemployment spiked, right? Here's the current chart of unemployment rate. I'll zoom into the most recent data so we can focus on that. I mean, it doesn't look great. We are definitely at high levels compared to the last couple of years. At the current level, it's the highest it's been since, let's call it November of 2021. After that, we were much higher. And this could signify a breakout. If we're going to look at straight technical analysis and look at trends, because we missed a report, this may actually jump up to, let's say, 4.5. If that does happen, you got to ask yourself, well, what is Powell going to do? So if you got Powell and Williams are on the sidelines right here, and they're concerned. Some of the comments that came out today, now Bostic, for example, said that inflation is far more important than the jobs. He's not worried about the jobs at all. It's inflation that's his big key. If we see jobs, the unemployment numbers surge, let's say it goes from 4.3 to 4.5 or 4.6, heaven forbid. If that happens, then you're going to see Powell and Williams switch to supporting rate cuts, right? Because if the unemployment numbers start to surge, you need to stimulate the economy, you cut rates to get those jobs back in line. But remember, what does that do? That's, of course, going to bring up the inflation numbers again and cause inflation to spike. So they're really in a catch-22 here. They're damned if I do, damned if I don't. If we cut rates to help the unemployment rate, inflation is going to get higher. Well, if we raise rates to fight inflation, then the unemployment is going to get worse. What do you do here? Big Eb says, unemployment would have to have risen, I would think. I would think so, too. I mean, look, we're all skeptics from the data anyway. I don't think there's anyone in this room right now that believes wholeheartedly that the data being released is 100% truthful, honest, and an accurate representation of the real data situation. I certainly don't believe that. But it's what we have to go off of. So, we talk about how these institutions and the markets are manipulated. Well, I don't think that data is going to be the saving grace for any of this. But I think that just as a gut feeling about what the economy is doing, all the government layoffs and shutdowns and things like that, you're hearing about more and more layoffs here, then I think that we'll have this. I do think we'll see that December or November report probably tick up to 4.5%. And that would spook the markets. I think the unemployment rate getting to 4.5 would certainly spook the markets. Now, remember, my attitude on it is When Ben Bernanke said full employment is 5.5%, this I'm fine with this. I'd be fine with 4.5, but the markets wouldn't be, right? Great day to you too, Rob. Mickey says, it's the real data they want. Yeah, well, who knows what the real data is, Mickey? I mean, that's the tricky part. Who knows exactly what that real data is? And as a trader, someone that's been doing this for 28 plus years, it's so hard to accept the data. But I don't have anything else to go off of, right? So I need to just focus on what that data number is and what the expectations and reactions to it will be. So he says, what's going to happen when AI takes over and a bunch of jobs and unemployment and it's 8 or 9%, rates at 0 for the rest of my life? Hey, I'll tell you what, it's a great question. So I know there's a lot of people here who just can't stand Joe Rogan and you think he's a pompous, arrogant jerk. Whatever, I don't care. Watch the interview with Joe Rogan and Elon Musk and fast forward to the part where Joe Rogan asks him about universal basic income and what happens when robotics take over everything, when we have AI running everything. Really interesting discussion. I do consider Elon Musk to be a visionary and have a pretty good grasp on what that future holds. I think that, he might be a crackpot, he might be off his rocker, he's just kind of a goofy dude, but I do respect his perspectives on what the future may hold. And he's a big believer in universal basic income, which basically he calls it universal wealth income, where everyone will have enough money to buy and do what they want to do, to travel and do all these different things because the companies will be making so much money. I don't know. It's an interesting question is what happens down the road. I'm with you, Steve. I think that for the next few years, I do anticipate, like if you take from 2025 to 2030, I do anticipate that this is probably the lowest unemployment rate we will see from now all the way through 2030. I just don't foresee unemployment staying this low. I think you're going to see more and more and more. Just knowing how I can use AI and displace workers myself leads me to believe that any CEO or operations manager is going to just start using more and more AI opportunities, get rid of a lot of workers that are just a waste of air. And we're going to have this transition period of pain where we start to see more layoffs. You start to see more people unemployed, which is not contributing to 401ks, which is not spending money in the economy. And again, how does that impact it? You guys know me. Oliver knows darn well. I have been saying that at some point, I don't know when, at some point, this is all going to have a correction. And if we look here on, let's say, a monthly time frame, I mean, look at this chart. This is ridiculous. I talked about this today in a session I was doing. These crashes, which I've mentioned before, that 2000 .com bubble bursting, where we dropped almost 50% on the S&P. We had 57% slide in the financial crisis. And then you look at our current wave of just parabolic moves. The average person is going to look at this and go, okay, if these two red lines back here in 2000 and 2007 represented some of the most severe financial sell-offs in the history of financial markets, and we haven't had anything close to it, something's going to give here at some point. All right, at some point. And I'm hoping. It's my hope and pray and dream and wish and everything that when this does happen and this thing does start to fall apart, that everybody here has got some bearish positions and is ready to rock and roll to the south side and capitalize on these downside movements. I mean, it's going to happen. Oliver, am I right? Ollie, come on. Give me a little love here. You know I'm right. At some point, this market will drop 50%, 60%, right? It's going to happen at some point, whether it's now or 2030. I have no idea. And again, it's just about waiting for when that market gives you those signals. But you cannot have this type of absolute parabolic movement in a market without corrections along the way. I'm short AMD as of 10 o'clock this morning. AMD, didn't they have a big day today? Yeah, they're up 9%. Oh, man. Let me. This is on the monthly. Let me take this off the monthly and go to a daily. That's a gutsy one there. Yeah, they're a pretty big day today. Definitely very gutsy. I don't know. Ken says increased training, retraining the workforce. I think so too, Ken. But what are you going to do, right? If you are a tax person, or if you're a CPA, or if you're a script writer or an editor, when you can take the best edited books in the world and feed those into AI and say, this is how these books should be written, and you just put in your content and it does automatically, that's a displaced worker. When I can take all of my tax documents, scan them in to whatever, ChatGPT or Grok, and say, hey, give me the most optimal tax 1040 I can get by using all this information, it's going to go through every line of the tax code, find all the different deductions and everything you can do perfectly. Why do I need to go to Block or any CPA, right? Where do those people go? Where do those people go? I don't know. It'll be a very interesting few years. And again, I will be trading actively this whole time during 25, 26, 27, 28, 29, 30. But I don't have an answer for you. I don't have an excuse. All right, let me just end the poll here because I've been wanting to see how it goes. We've been up for 15 minutes now. So when the shutdown ends, the markets will. Let's see, 66% of you said rocket to all-time highs. 22% said sideways and choppy, and 12% crash, baby crash. Well, let's look at what happened out there today. The only real one that was just launching, pun intended, was the Dow Jones Industrial Average. I mean, the Dow is looking fantastic right now. Dow's all-time highs yet again. Broke it today. Yesterday they closed all-time highs, and today a new one. So just fantastic for those Dow 30. But again, in my opinion, the Dow doesn't really represent the broader market, right? It's a very limited basket of companies in there, which I don't think represents everything. So not that great. Now, let's go to S&P 500. So your S&P came right up to the yellow box that I had drawn out, which is really from this candle on, and this could be drawn multiple ways, but the way I've drawn it goes to that October 28th candle. The low end of that box was 6,901, and today our high point was 6,900. Right, so basically 1 point higher, and you would have tiptoed into that box and sold off. So we have a spinning top as it came into supply. Again, that's indecision. That's not a very positive sign. But look, if they sign a deal tonight, I think we'll probably get a pretty good pop tomorrow morning for the equity markets. We'll see if they voted through or not. I have not been following it to see if they've done it yet or not. But I do think that in the next few days, probably by this weekend, I mean, today's Wednesday, so maybe by Thursday, Friday, they'll vote it through. They're making themselves look bad by not voting this thing in. NASDAQ did not look as good. NASDAQ was a bit worse today. It was down 0.07%. And I saw someone post earlier like, oh, the Magnificent Seven kind of holding this down. Yeah, absolutely. Look at Meta, right? So Meta, I thought we had that hammer pattern on Meta, and now all of a sudden it's totally reversed. So, this is why you set your stop losses. It was a great trade for a couple days. Now all of a sudden Meta down 2.8% today. If I zoom out here, it's not looking good for Meta. If you break those lows that we established just 3 days ago, and that low point on Meta is 601.20, you get below that, you've got unfilled gaps here that need to fill. And that could take it all the way down to 549, which would be a great buying opportunity for anybody who is believing that Meta will be the king down the road. Tesla also taking on the chin today, down 2%, but really not that bad. If you go back to my belief system, which is as long as it's making higher lows, that's the important part. And really, it is making higher lows here for Tesla. So while it was down 2% and it's looked a bit weaker over the past 5 or 6 days, still looking okay to me. Now, Amazon, for our Mag 7, we had that nice hammer pattern 3 days ago, gapped up, and now just erased almost all of that. We're pretty much right back to where we closed on Friday's session. It was down 1.97% today. Again, until we get below Friday's candle, not too much to be worried about here. Google was the one setting those all-time highs. A little bit of a stall today, down 1.48%, but still beautiful uptrend. Everything looks great. Apple, this is a bearish Harami formation. How do you trade it? Well, pretty simple. We'll just go put a yellow box around it as we try to make it as easy as possible. And that yellow box here is going to be between 271.70 and 275.73. There you go. This is interesting candle patterns on Amazon. Yeah, it's interesting because you've got these really big red candles. It seems like it just hesitates, has a calm day, and then just rips one way. But what makes me nervous on Amazon, even though, you guys know I love Amazon, even though I shorted Amazon on what was that day? It was this day here on Monday the 3rd. Closed my position out, happy with the trade, but you have this big unfilled gap. And that gap really goes all the way back down to 222 on Amazon. Looks like a self-playing piano tape. I like that. That's a good analogy there, Steve. I like that. That was a good one. Yeah, that big gap makes me nervous. And of course, that's the deal with OpenAI. To me, that's nothing of substance yet. That's a promise of future payments. So this is a gap up on expectations. It could very easily close this gap because the fundamentals and financials of Amazon haven't changed. There's no money coming in. It's all a promise. So yeah, this is one I'm not too excited about. NVIDIA. Hey, you had an update on NVIDIA, 0.33%, but chart-wise, oops, let me get that squared up for you. It still is looking okay. Higher lows, but not the best-looking chart. Microsoft was your victor for the day, up 0.48%, continuing its bounce off that demand zone, although it had a really long bottoming tail. And if you are long Microsoft, I think, who of you bought Microsoft? I think there were a couple of you that bought Microsoft on that hammer formation I discussed, or that spinning top formation. This actually looks pretty good. If you consider how far down Microsoft was today, good job, Steve. I think you're probably in a great spot. Great spot. And the reason is, look how long that bottoming tail is today, and they came right back up. Remember, what this candle tells everybody is at one point, today's candle was a massive red candle. Just a giant red candle, and then it came screaming back up and closed almost at the dead high. That's a sign that the buyers were rushing into Microsoft. So I think that that's a very positive sign for you. Unfortunately, I'm still long Meta as well. Oh, you're playing with the fire stocks, huh? A little Meta, yeah, that Meta one. You know, you got to have your stop loss in place here, because again, if it breaks that Friday low, you could have some problems here for your Meta trade. Not looking so good. You know, and it's about catching that falling knife, right? I'm not sure where you bought it, but I'm okay catching the falling knife into demand zones. But now that it's potentially below those demand zones, you got to go, oh, I'm out. All right, cool. Again, not financial advice. I am not a financial advisor. I can't give you financial advice. What I can give you is advice on movies. Let's do a tangent. You guys ready for a switch? I'm a big fan of Guillermo del Toro. He is just such a great visionary. I don't know if you guys watch movies by Guillermo del Toro. We're talking about Pan's Labyrinth is one of them. The Shape of Water is another one. Shape of Water was okay. I really loved his new rendition of Pinocchio, which was great. He came out with one, was released on Netflix, I think yesterday or day before yesterday, The New Frankenstein. Very interesting. Incredibly well shot, very dark, it feels just kind of evil and sinister, but it is I really enjoyed that movie. Pretty violent. If you don't like violence, then you might want to stay away from that one, but yeah, it was a pretty good one. All right, total tangent. Sorry about that one. I don't know, I just watched it last night, and I was like, oh, it was pretty good. It's the attention to detail from Guillermo del Toro that is just incredible. Like, it's so well shot, it's so good. All right, let's go back to the matter at hand. Visually okay, bad rendition. I'll give you that. It was a weird story, but I'm okay with it. It's a love story, and you think the original Frankenstein was any better? Yeah, it's on Netflix. It just came out. A couple of things I wanted to talk about. We had discussed over the past couple of days, Bitcoin and adoption, and kind of why I believe we're headed down for Bitcoin for a little bit. Not a crash, but certainly the trend is your friend till the bend at the end for Bitcoin right now. And that trend, as we can see here, is not looking so good. We're down 1.33% on the spot of Bitcoin today. We're outside the lower end of that little kind of megaphone pattern, some people would call it. This does not look very good. And again, I'm looking for that close below 100,000. Now, I was talking to a friend of mine in the financial arena, and he was saying something that I thought was really interesting. He says, look, you have these giant legacy financial firms. We're talking Bank of America, Wells Fargo, JP Morgan Chase, right? These companies are the linchpins of lending, right? They're the ones that kind of steer the boat with regards to lending. And what they've done is they now are accepting Bitcoin as collateral for loans. Now, that may not seem like that big of a deal, but think of it from a adoption perspective, right? They want an asset that has value to it as collateral for these loans. But so now for me, instead of selling my Bitcoin, I can go to JP Morgan and I can say, I'm going to put my Bitcoin down as collateral. It's still my Bitcoin, but I'm going to put it down as collateral for a loan. I think that this does a tremendous amount for the crypto industry, because now it's going to take people like myself who don't want to sell my Bitcoin, right? I'm a long-term guy. I don't want to pay the capital gains taxes on it yet. Let's wait till maybe there's some preferential treatment down the road. But maybe I can go to JP Morgan and I can now use that Bitcoin, buy myself another home, an investment property or something like that, and continue to grow my net worth and my wealth that way. Again, it goes back to the endgame show I did for you guys a couple of days ago or a week ago. Someone asked about what's my endgame, and it's about setting up multiple streams. And I've got those four, right? Remember, I have my W-2 job, then I have my 1099 jobs, which are just gigs I'm doing for a bunch of different companies. Fine. I've got real estate as well, and I would like to build out my real estate portfolio more. So why not leverage my crypto portfolio, which actually is the fifth element, which I didn't draw on there. I kind of put that in the trading side. But I've got my crypto portfolio, which is another piece, my financial portfolio, which is investments and 401ks and things like that. So I really have 5 streams, right? I'd like to build out that real estate one more. So if I can take this crypto, which is sitting there idly and profiting if the markets move up or down, that's fine. But why not use that as collateral, get myself a loan, buy into a property, refinance it when it gets down to 3% loan, and continue to grow wealth that way. I think that this might be something that actually does help spur growth in real estate and housing. Are you saying that you pledge Bitcoin as collateral but physically keep the Bitcoin? No. your Bitcoin is given to JP Morgan. So it would be transferred over to JP Morgan as collateral, right? They're not going to just be like, oh yeah, you're fine, you keep it. No, they want to make sure that you're going to, that they have possession of it. It would be in their control. Now that opens up a whole new set of problems, right, Mark? Because if I now give my Bitcoin to JP Morgan or Chase, whomever, and I'm using it as collateral, now it's JP Morgan's. And what are they going to do with it? Are they going to rehypothecate it, which means they're going to lend that Bitcoin out to somebody else? That's a very real possibility, right? So I just bring this up because I think there's a lot of people, not necessarily in this audience, but I think the average American still has a stigma against crypto, that it doesn't have any value, it doesn't serve any purpose. What JP Morgan and Wells Fargo, Bank of America are essentially saying is it's a legitimate asset class that we'll accept as collateral. I don't see JP Morgan saying, oh, well, we'll use your Porsche 911 as collateral. I don't see them saying that they're going to use, other assets as collateral. Like, can I bring in my gold and use that as collateral? Possibly. But to say you're going to accept Bitcoin as collateral, and only Bitcoin, right? Not Ethereum at this point. And I think that has a lot to do with the Bank of International Settlements. I mentioned this earlier, the BIS. The BIS now made it as of January 1st that financial firms can take custody of crypto. So maybe this all kicks off in January. But, when we look at the hypothesis for the future, what's going to happen with adoption with crypto, this is a big step. I think it's a huge step. And there's a lot of people, I think Big Eb is in that category as well. Big Eb said, I'm not going to sell until we get to 2030. Well, that's a 5-year window of time where your Bitcoin is only going to make profit or loss based off price fluctuations. But now I can take that, get some collateral loan, and now have money to go do what I want with and earn more with that money. Maybe I can take that collateral and buy more Bitcoin with it, or buy a house or something like that. So there'll definitely be charges now. You think a bank's going to do that without a charge? Name a loan a bank will give you without a charge. Yeah, they're definitely charging you. But I think it speaks volumes to how the financial world is slowly starting to integrate traditional finance with digital assets, which again has been my soapbox for years. Is there will come a point where those two markets merge, and that overlap brings in people like myself who are very bullish and understand digital assets, and other people, I would say like my friend Scott, who doesn't know squat about crypto. He thinks it's a scam. He thinks it's a fraud. Now all of a sudden he's going to be at his bank and he's going to see Bitcoin and Ethereum and Cardano being offered by Wells Fargo or Chase. And that legitimacy is going to make him more comfortable and brings more people into the fray. And that fosters more adoption. So to me, that's the big piece out here with regards to these firms giving loans. I thought that was a rather interesting piece. Anyway, total side tangent here, I know. My bad on that one. All right, back to where we were. Going to, and by the way, hi Lisa, good to see you. Glad to have you join us tonight. Let me see, there are comments that came through, and if you guys have things you want to discuss, let me know. It probably might get expensive soon, get less expensive soon, yeah. More construction too. We'll see if rates keep dropping. Remember, if rates continue to drop, that should lower your 30-year fixed rate mortgages, which actually means prices may go up because more people are demanding properties. Merlin, what would happen if Bitcoin goes down 50%? Would Chase Bank sell your Bitcoin since its value is down? That would be a risk, Chio, because it's now the bank's asset and they're using it as collateral. So they would have full authority to sell it to protect themselves. So yes, in the crypto world, if you want right now, you can take your cryptocurrency and you can go out to a DeFi site and you can lend your crypto. You can also borrow against your crypto. So you could pledge, let's say, $50,000 worth of Ethereum and you lock it in there and they'll give you, let's say, I don't know, I'm making it up, but let's say $15,000 worth of DAI, which is a stable coin. You can now take that $15,000 and go do whatever you want with it. If your Ethereum now drops to a value where it's worth $15,000, they'll automatically liquidate it to make sure they don't lose money. So yes, there will be provisions put in place where these banks, traditional banks, TradFi, will be able to sell your crypto to make sure they don't lose money, right? That's their number one concern. They could give a squat about you. They want to make sure they're not losing money on that trade. So yes, they would have authority to sell your cryptocurrency, right? And that's not necessarily a good thing. So as it sounds great on one argument, there's another argument which says may not be a great thing. Always know your risks, know the terms and conditions. If you are, I may look into doing this actually. I've been looking at buying another piece of property. I want to buy a piece up in Big Bear. And I could probably pay for it all cash, but I kind of figure, like, why not use my Bitcoin? My Bitcoin is not earning anything. My Ethereum is earning about 3%. My Solana is earning about 7%. My Polkadot's earning about 14%. Those are all earning assets. My Bitcoin's not earning anything. So I'd rather just take that, maybe get a loan against it, pay the fees, whatever that may be, and buy a house that I want. Why not? Let's see. That may even convince Elizabeth Warren. Dan, we can't. There's no miracles here, bud. I don't know if Elizabeth Warren's going to understand this at all. It almost sounds like a reverse mortgage if the value goes down. Yeah, there's definitely some similarities, RG. Making crypto investing more accessible to all. That's the added bonus of all this. Number one is institutions saying, hey, we're okay with crypto. We'll use that as collateral, because it's the institution saying this is a legitimate asset. So it's legitimization is number one. Number two, it allows everybody who's been holding forever to not sell, but to use it for other purposes. And I think that's a big piece. If there are large job losses in the near future, housing will suffer. Agreed. And there may be some big sell-offs, right? There may be, just like we saw in 2007 and 8. I don't think we've had the same extent of lending, but I'm already hearing about people not able to make their car payments, and that's starting to escalate. And you know, markets move in cycles, everybody. We all know this. Life moves in cycles. And if that cycle is starting to look negative again, where people can't make their car payments, well, the next step is they can't make their rent or their mortgage payments. And the next step is foreclosures. And the next step means the cycle, the downward spiral gets a little bit deeper. How deep it goes depends on the government and just systems in place to protect us from falling that far. But yeah, I agree with you, Big Eb. It could create great opportunities for those who have cash on the sidelines, those who are prepared for it, and particularly those who have been shorting the market. Because obviously, if we do go down in a similar pattern to how 2007 went, there's going to be some great opportunities to the short side. Let's see. If they sold your crypto, then you would owe the capital gains taxes. Yes. Yeah, that would be a kind of a double dagger, right? So you lose your value of your crypto, and now you got to pay capital gains on it. So yes. But remember, we have to fall a lot. They're not going to give you like one-to-one collateral. They're not going to say, oh, you put up $1 million worth of Bitcoin, we'll give you $1 million loan. It's like you put up $1 million worth of Bitcoin, we'll give you a loan for, let's say, $250,000. That's, it's a percentage loan. It won't be a full one-to-one. So in that scenario, you put up $1 million of Bitcoin as collateral, they give you a $250,000 loan. If the value of that Bitcoin falls all the way down to $250,000, they'll liquidate it, cover the loan. But if it falls all the way to $250,000, you're probably below your cost basis anyway, so no capital gains, right? So you got to look at it from different perspectives. Right, Steven? Hey, good to see you, John. Let's see. 2,000 stimmy checks, 2,000. Yeah. Well, you're not going to get a check, technician. It's not going to be a check that's sent out where you can go buy TVs and garbage like that. It's going to be a tax credit. When your car payment is bigger than your mortgage, that's a problem. Totally agree, Luis. It makes no sense. Look, I'm a firm believer that if you can't pay cash for your car, you shouldn't buy one. And you shouldn't buy a new car, you should buy a used car. Yeah, that's always been my attitude. Private dinner at the White House today with all the big bankers. Wonder what that topic is. I'm sure a lot of it will be digital assets, integration into, I think, tokenization. I have a presentation in Vegas in February for the Money Show that's going to be all about tokenization. So I won't share any of that with you right now, but I'm deep in the rabbit hole. Like, I am very deep in the rabbit hole on tokenization, trying to figure out exactly how it's going to change morph these markets. And remember, Larry Fink came out earlier this year and said, tokenization is $1 trillion market, and we want to be all in on it. I was like, oh, okay. It's going to be interesting. I believe within the next 5 to 10 years, you guys, your heads will spin at how things will all be tokenized. Like even your entire portfolio. Let's say you wanted to take your entire 401k from one firm and move it somewhere else. They'll take your 401k, all of it, without selling anything, wrap it up into a token, and just move that token over, move it in seconds, and now the whole thing's there in a new place. Just wild the way that money will move, assets will move, ownership will change and be documented. It's pretty cool. So he says, Merlin said a Big Bear, you should look at Idlewild. It's one of my favorite mountain towns and stuff like that. I might check it out, but I want to be near a ski resort. Part of, in full transparency, I'm due for a change, and I love snowboarding, and I wouldn't mind just getting a season pass and snowboarding during the day, work a little bit, cut back on my job a lot, but just go snowboarding much more frequently. And you guys know how expensive snowboarding can be, but if you have a season pass, it drops it down significantly. Larry said, I shorted crude oil again yesterday for $2.50 today. It seems I'm at the money all year. There you go. Hey, Larry, what does it boil down to? Trading is all about finding something that works and exploiting that thing that works until it doesn't. So if you found a system that works for you, you got your strategy working there and it continues to work, don't change a damn thing. Keep doing it until the net results are that you're losing money on it. Other than that, keep doing it. I think that this is one of the key things people don't understand is they make money, they have success, and they constantly keep changing things. Like, well, you had success. Why don't you just do what was working for you, right? I don't get it. Oh, there you go. Reno is nice now. Now, I don't know if I would, Atticus, I love Lake Tahoe. I grew up, my first house I bought was actually in Truckee. I could see going back to Truckee. I'd probably do an incline village to the eastern side of Lake Tahoe because it's Nevada and I would save 10% on state income tax, which may not seem like a lot, but man, 10% adds up very, very, very quickly. So yeah, I'd probably do Steamboat Springs. Yeah, I don't want to go all the way to Colorado. My father lives in Northern California and I want to stick around for as long as possible. After that, who knows where I'll head. All right. Not perfect by any stretch, but this year has been awesome. There you go, man. You got to love that, Larry. And you've got what's working for you. Stick with it. Don't change. But what's funny, Larry, is you're gonna keep doing this strategy over and over and over and over and over and over and over again. And what you'll find at a certain point is that strategy is not going to work anymore. And it's going to frustrate the hell out of you. When that happens, immediately scale back. And pull back your bets a little bit because I can't explain why this works, guys. But just going back to the stories from my trading background in my past, there was a period of time from 1998 to like 2024 where for some reason I traded these stocks and it was for 2 years straight. I traded E-Trade for 2 years straight. It was like every single day I would just trade E-Trade. Why? Because I found that I was making money consistently with E-Trade. I found that with Apple, I was losing money consistently. So see you later, Apple. But for some reason, something happened with E-Trade, and all of a sudden, I wasn't making money. I don't know whether the people behind it, the institutions, changed their patterns or whatever, didn't work. So then it was Broadcom, and then it was Qualcomm. Not Qualcomm, Juniper. They used to call me Mr. Juniper when I was teaching over at university in Italy because I'd be logging in all the time, like trading Juniper. Like, why do you trade the same thing all the time? I said, because it works, but it will change. And at a certain point, man, you're going to be like frustrated because it's not working anymore. Start all over again and find a strategy that works again. Steve says, yeah, I trade the same stuff every week. Cool. And again, it is good now because the markets are trending so strong. But Steve, that when that change comes and all of a sudden things break the other way and it's all going down, that mindset has to flip. And you got to go, okay, well, now I'm going to be net short the markets. So then with that train of thought, you should start trading Apple again. Yeah. You would think so, but I've told you this before. I have made a rule in my trading plan that says I can never trade Apple again. And I put that in there in like 2000. And I could trade Apple today. There's no doubt in my mind, but it's more of a discipline thing, right? I don't know. I look at it's one of the cornerstones of my entire trading history and discipline is the fact that I know I lost money with Apple and I haven't touched it since, nor will I ever touch it again. Even though I know I could do well with it. I think that is just something it's almost like an Alcoholics Anonymous badge, right? I've got it on my chest and I know, see that? No, never going to trade it again. And I think that instills my confidence, reiterates my discipline and how determined I am to follow rules. So there you go. So technician, no more. Oh, Michael, good to see you. Let me guess what this chart looks like. CBRL. Yep. Wow, what a shocker. Michael, I could have almost have guessed that the chart you were going to tell me looked like an absolute freaking apocalypse. You love these things. What is wrong with you? I think that you're trolling me, Michael. I really do think you're trolling me, trying to get me worked up by suggesting this stuff here. For the love of God, what are you doing? Cracker Barrel, CBRL. This thing was at $70 in July. It's at $30 today. If this was a pile of dog doo, it would just have flies all over it. Stay away from this thing, man. Who cares what price it is? Who cares what they do? They shot themselves in the foot with a stupid logo rebrand. They lost a bunch of customers. Could this thing turn around? Yeah. It is just terrible. I mean, this thing, there's nothing you could not convince me to buy this stock under any circumstance. The only way would be once it starts to make a new high. This has not made a new high since July of this year. Garbage. Wah, wah. Move on. Leave it alone. Naum says, how about this company? SKYT. All right. Hallelujah. Hallelujah. Right? SKYT. Look at it. What's the trend saying? Trend is your friend till the bend at the end. It's moving up. It's making higher highs, higher lows. What I don't like is that this thing started off back in April of this year at a $5 stock, and now you're talking about, something that hit 24 bucks. That moves a little too fast. But in this case, Naum, I don't know what Skywater Technology does. Don't really care. What I would suggest is, wait for it to pull back and get on the lower end of this curve. You could probably throw on moving averages. Let's put a longer term moving average and see if we can tailor this to, let's do 50 would probably get us those bottom parts in there. Well, I'm just going to do a weird little thing here. Just bear with me as I'm trying to tweak this moving average to clip those lows. Something like that. Maybe wait for it to drop back down to those, to that moving average, even though it's a weird 85 period moving average. You look at, it's been bouncing off that several times. And I don't know why that phenomenon exists, right? You can see it bounce here, bounce. I would wait for it to come back down towards that moving average before I would touch it, right? But price looks good. You're in something that's moving up. Trend is your friend to the bend of the end. I love it. Love it. I just think right now is not the time to buy because it's too elevated. It had, in a week, let's just move from the low here we saw on Wednesday, the 5th, to our high, and hold on a second. It moves 71% in 3 days. That would cause me to leave it alone, right? If it comes back down towards that $15, $16 area, sure, give it a shot. But at least this thing is trending up. Keep torturing the chart. You know my phrases, Les. You know my phrases. What's the other one? TXN. All right, so Texas Instruments. I'm not a big fan of Texas Instruments. I use their calculators in high school. I know they're doing a bunch of different stuff. If you look at this, just from a sake of what this thing has done, it has done nothing since 2021. So right away, I'm not that interested, right? You've got really no big trend going on. Yes, it has some nice big moves, but all in all, if you bought this thing back in mid-2020, you're break even. It's really done nothing. So all you can really do is go off of the trends and current situations. So what I think you're asking, and I'm okay with this one, Steve, if you look at this, let's just map out the range for the past couple weeks. This is a yellow area right here. Okay. Like I said when I was talking about Michael, the only reason I'd be interested in buying something is in a downtrend is either it's in a very strong demand zone or it's making a new high. So if it broke out of this yellow box to the upside, and the upside would be $165.62. If it broke above that, well, I would consider starting to build a position in it. It's still trending down off these peaks we saw in July, right? It still looks lower lows, lower highs, but at least it's starting to show a little bit of stability here. It's been like, 6, 7, 8 days in a row of just kind of sideways chop. I don't think you're done. I don't think you're out of the woods. You do have some downside gaps that have not been filled yet. So to me, I don't think you're quite done here on Texas Instruments from the downside. You've got a gap that goes all the way back down to 146.50, and we're currently at 163. So I still feel like Texas Instruments wants to go down, but at least by doing this, you're putting a framework around it and saying, hey, if it gets below this level, I'm out. If it makes above this one, I'm going to buy in. And I think that this is where most traders make mistakes. You guys know that I'm a big fan of keeping it as simple as possible. Like, why make it complicated? Why torture yourself if you don't have to? And just doing a simple yellow box like that makes it so easy. The decision makes it just much, much easier. I take your help. Yeah, but you like to look at things that are beaten up, Michael. You should learn to short. That stock you had up there earlier is a great short, right? Cracker Barrel? Man, that thing just couldn't look much worse. What is the best investment that food companies years ago was companies like I don't care what happened years ago. Years ago doesn't make any difference. It's what's happening right now. So here's your ConAgra Brands. And to be fair, I think ConAgra Brands is a great company, but I'm not buying it. Why? Because it's not showing any strength right now. If I want to buy ConAgra Brands, I'll tell you where I'll buy ConAgra Brands. If I'm going to buy ConAgra Brands, CAG, it has to get above this high, which is $19. And we're currently sitting at 17. So, nope, not interested at all. It's not showing any strength whatsoever. It has not made a new high at all, so you got to leave it alone. What about Kraft Heinz? KHC. Same thing. Garbage. There's no new highs being put in. So until it makes a new high, this thing will continue to trend down. Essentially what you're trying to do, Michael, is you're trying to stop an avalanche as it continues to come downhill at you, right? You're like, you shall not pass. It's going to stop right here. No, it will continue to go until it stops, because I don't care how much money you have. You don't have billions of dollars like these institutions do. And those billions of dollars worth of institutions are going to continue to push this down. Now, you could go out there and look at something like Kraft Heinz. And let's go to Yahoo real quick. And I'm going to go to finance, and I'm just going to do KHC. Because my guess is the short interest on Kraft Heinz right now is probably pretty significant, right? Now, one of the saving graces might be that this is being pushed down by institutional shorting. So we can go here. I think it's under statistics. And we'll scroll down, and you should be able to see the short interest. Oh, it's actually not that bad. 6%. That's actually very low. 6% of the float is short, which is actually not a good sign, because if only 6% is short and that chart looks that ugly, this thing's bad. Bad news. You know, look, is Kraft going to go bankrupt? I don't think so. Is ConAgra Brands going to go bankrupt? I don't think so. But it certainly does not warrant buying them when the chart looks like that. You've got to wait for the market to tell you, okay, it's turned the corner. And this has not turned any corner. All three of those ones you mentioned look bad, look really bad. I'm only go long and I'm not set up to short. Okay, that's okay. And I'm fine with that, Michael. I love it. If you can only go long, that's great. But why are you buying things in a downtrend? Buy things in an uptrend. You want to go with the market momentum. You know, like I'll just go through, let's go through the Magnificent Seven, right? Uptrend. Tesla, uptrend. Amazon, uptrend. Google, uptrend. Apple, uptrend. Nvidia, uptrend. Microsoft. Microsoft actually not really in an uptrend anymore. But really, you know, and you're probably thinking, well, I don't have a lot of money. I don't want to buy Apple because it's too expensive. You don't have to. If you make 10% rate of return on a $10 stock versus a 10% rate of return on a $1,000 stock, it's still a 10% rate of return. You just buy fewer shares. So get away from these things that are downtrending. You're trying to catch a falling knife, and it's basically your odds of success are significantly small. You want to make money? You buy what's moving up. You want to make money? You short what's moving down. And since you can't short, you buy what's moving up. All right, Dan, who escaped California. When you see a chart like EMBJ, let me go EMBJ. Oh yeah, that's gorgeous. I mean, this is technical analysis pornography right here, right? Look at that chart. It's beautiful. There's only one time where it would have jigged you out, and that's right here on April 4th when it made a new low. You would have gotten out of this one. Other than that, it's been higher lows since July. July of this year. Or July of 2022, excuse me. All right, that is wild. Wild. I feel dirty. Don't feel dirty. So you say, see a chart like this, do you get in on a correction or wait for the big drop first? I would wait for a bigger drop. You know, you're right at all-time highs. It's dangerous, so I would certainly wait for, you know, even if it's something as low as just $62, you do have a decent spot right around $59.50. But yeah, I mean, this is where you want it. Chris says, sorry for this. What do you think about the Supreme Court's upcoming rulings on the tariffs and the effect it will have on the markets? I don't really care. No offense. I'm not just dismissing the questions, Christy, but I don't put a lot of weight on it. It'll be what it is. I don't know. I haven't thought about that in any way, shape, or form. It'll certainly have an impact, but it depends on what the ruling is, what the Supreme Court says. There's too many variables there for me to try to soapbox my idea of what might happen on that one. All right, let me go to your economic calendar, which I've already shown you, but we have to erase some of this because there's a bunch of other market pieces. Remove all our filters. We'll go out to the 13th Thursday the 30th. Not a Friday, but a Thursday. We already had a ton of members speak today. Again, you have a lot of members speaking tomorrow. You've got Daily, Kashkari, Masalam, Hammock. You've got several others speaking tomorrow. So it's a big FOMC day. You have that 30-year bond auction. The one to watch out for will be crude oil inventories. So if you look at that crude oil chart, I'll bring that up for you guys here right now. Your crude oil chart for the day, which we haven't looked at quite yet, was down 4.1%. Pretty big dump there. That may be forecasting the inventory numbers here being higher than expected. But right now, you're kind of just bouncing back and forth between these two yellow boxes. So until we get out of that range, I would just trade that darn range. If it strikes the tariffs down, it could propel the markets up. It could. Remember, the tariffs are a big bargaining. The tariffs are part of the strategic chess game that Trump is playing, and that has been driving the markets up. So even though I'm not a fan of tariffs, they're being weaponized, and it's actually helping the equity market. So if you strike that down, and all of a sudden we can't use tariffs in that way, then that might actually be a weak thing for the market. Right? Might be a weak thing for the market. All right, back to our economic calendar here. You have the crude oil inventories, I just mentioned, that's going to be coming out tomorrow. On the earnings front, I believe we have Disney. Let me get my earnings calendar here. I think Disney comes out with earnings tomorrow, which will be fun for everybody. I'm sure you're all so excited about Disney's earnings now that they pulled their sports package from Hulu or from YouTube TV. Pretty upset about that one. Actually imposing tariffs and threatening to use tariffs, not the same. True, but he is doing both, right? We are imposing tariffs and we are threatening to put tariffs and raise tariffs to 100% or 150%, right? It's weaponizing from the threat of it, but they're also the tariffs being put in place. So here is, what happened to Cisco? Okay, cool. Cisco came out with earnings. They beat earnings up 7%. That's good. That's good for our markets. And if you look at tomorrow, so here's 533 companies reporting earnings tomorrow. One of the bigger names on that list is, of course, Disney. They're going to be before market open. After the market closed, you only have one big tech name. That's going to be Applied Materials, or AMAT. And that's pretty much it for manana. All right. Oh, I didn't think I was going to be able to make it a full hour today. Well, we did make it a full hour. We are less than a full hour. Anyway, tomorrow's Thursday. I've got no guest. I have not looked at scheduling any guest on the program, but we'll have Thursday and Friday will be just me. If there's something you guys want me to discuss on tomorrow's show, send them on in. I didn't get any questions for today's show, so we'll just kind of play it by ear. If you guys have some, send them on in. TraderMerlin@gmail.com is the email on your screen, or you can put them down below any of the YouTube videos that I have. Wherever you put your comments, I'll see it on my control panel. So send your comments in, your questions, your feedback. Let me know what you guys would like to very quickly session. What do you mean? It's been 53 minutes. It's been a long session, Rob. Long session. Anyway, that's going to do it for me. I'm going to head over to the dog park. Well, before the rains hit, for those that don't know, Southern California is going to get blasted by rain for the next week. It's like 7 days straight of just rain. Bring it on. We need it. So I'll be hopefully having internet here and not having issues. So I'll see you guys tomorrow again. Send me any questions you guys have. See you tomorrow.